Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, November 8th, 2017. I wanted to go over some of the recent index and sector ETFs that I've covered, as well as some individual trade ideas recently. So, really a quick market overview. Again, not completely comprehensive of everything, just some of the things that I'm watching lately and that I've covered in recent weeks here. Starting out with the XES, I've done quite a bit of coverage on this one. The energy stocks, in particular the equipment, oil and gas equipment and services ETF, that's XES. We have now fully formed that inverse head and shoulders pattern. We're up to the neckline. Um, I mentioned, I'm expecting a reaction. That's my preference here. Again, to see some type of reaction before this pattern breaks out, assuming that it's going to break out and really stick and run. So yesterday, I've closed my positions. I had XES as well as some of the individual stocks that I've covered recently. I want to say that I do expect a pullback here. And even if we don't get a pullback, if we happen to punch through this neckline a little bit with a little more upside momentum, I'm not liking XCS right now. And again, I'm a swing trader. If you're a long-term investor and you want to hold on and you think this inverse head and shoulders pattern it will ultimately play out, fine. If you took this thing anywhere near the formation of the right shoulder, you can put your stops there. You've got a long way, a lot of profit give backs. But again, we may come in and form a complex head and shoulders pattern that gives you a second right shoulder. A lot can happen here. But let's forget about all the myriad of possibilities. Let's just look at the facts here. We are overbought right now, as you can see here. XES, you have a history of becoming overbought, like we were back here. You can see overbought reading here. You can see what happened after that overbought reading. We were overbought here, and we came up, made another lower overbought reading. But either way, that was the top, that overbought reading there. We had a little pushback, hit overbought again. That was another time to get out. So you can see trading and investing, it's pretty simple if you look at it from a perspective of risk and reward. Um, can this thing pop and continue to go up? Absolutely. Is it worth it right now being overbought and extended when you can see what's happened in the past every single time without fail? And this is 2 years that XES became overbought. You can see what happened afterwards. To me, it's a no-brainer. Take profits if you caught that, move up off the right shoulder. And, again, if you want to set your stops wherever you want, let the position ride every now and then, that does play out. So that's it. Now, overbought in itself is not a reason to sell, especially in a primary uptrend. Now, we're not in a primary uptrend. We cannot look at this chart and say that XES is in. This is a near-term uptrend, intermediate-term uptrend. The bigger trend is still down at this point. So therefore, overbought in particular becomes more of a sell signal, just a one and done, meaning you hit it and it rarely stays overbought when you're in a primary downtrend. However, when you're in a strong uptrend bull market, overbought, I often say, can become more overbought, meaning the RSI can exceed that 70 level, keep on going up to 80, whatever it is, or stay overbought for an extended period of time. So again, that's not the case right now. We're not in a primary uptrend, so there's another reason. And then finally, let's just say we have a little breakout here soon. Let's just say we do this. My preferred scenario, if we break out now, being that we're so overbought, would be this. You're going to, right now, you have potential. It's still unconfirmed, but you have potential negative divergence. So if we pop up here, I'll draw the line out. This would be your divergence line. That would be a breakout to new highs. Uh, I would expect that breakout to fail. If it does fail, not only do you have what we call a bull trap, a false breakout, a break above this well-watched level. I'm sure by now others have picked up that pattern. We were looking at it as it was forming back here, a potential, and once we put in that right shoulder, that's pretty visible to, I imagine, a lot of eyes. So nothing would be more bearish than see a false breakout that reverses back down below that neckline, putting in these divergences. Now you have negative divergence on the daily time frame. I don't think I need to say much more. So again, that's my take. I'm not shorting the energy stocks here. There's too much momentum right now, but I can tell you I'm out. So let's look at a few of the others and how they've done. Some of the ones I've covered recently. This one I had yesterday sold. There's Halliburton, HAL. That had the same, potential, which is now a fully mature inverse head and shoulders pattern. I had the falling wedge drawn there, but again, I've covered this one in the past. You can see the beautiful symmetry on this pattern: left shoulder, head, right shoulder, right up to the neckline. So this one's still a setup on watch. I'd prefer to recycle back in after some consolidation here below the neckline. Um, or maybe a little pullback first and then a thrust up and then targeting that 50 56ish level. So that's Halliburton. Again, a little extended in the near term, and a couple others that we looked at. I mean, there were quite a few. SWN has done well lately. Southwest Energy, that one broke out and hit this 630 level. That was, I told you, the resistance zone. So ultimately, we need to see a breakout of that level. But it was good for a trade, even if you took the breakout on the quick pop. And then there's SN. That one's done well recently. In fact, this one was mentioned here before the breakout. Since the breakout right about here, this one's already rallied about 15% and right up to resistance. You can see this is a target level I have here, and you can see how well these levels work. We punched through there intraday and closed right back down below that resistance line that I have there at 511, right on it, actually 511. There it is. Let's see, the close was at got to do the pop-up box. It looks like right below it. Yeah, okay, there it is. Well, 511. Take that back. So right on resistance. Either way, a nice 15%. Does this chart look bullish longer term? Sure does, but I think a little too much. PPO still trend indicators bearish right now below the zero line, right at resistance with the sector at resistance. So I can see no better reason to take profits on that if you guys caught it. And finally, a couple more. Still looking good longer term. WFT, I've been highlighting this one since the back test. It's been moving up nice. There's another, 15% or so gainer since it was highlighted just a couple weeks ago. And then let's move on. Let's get away from the energy sector. So again, if you're in it and you want to continue to ride this momentum, you can trail up stops. There's nothing wrong with that. You might you see this one continue to run all the way up here to 475 because I don't see a lot of resistance, and that is and was and still is my next longer term target, and that's about another 15% or so higher on WFT. So it's up to you. Again, I just especially adding new exposure to the sector right now. Um, the risk reward isn't there. Speaking of momentum, another sector with momentum is the cannabis stocks. I did extensive videos. I have too many on my watch list, and unfortunately, although there's an ETF, it's not been around that long. This one here trades on the Canadian Stock Exchange, and they also have, or the Toronto, they also have a U.S. version of that fund. But again, it hasn't been around a lot, not a lot of charting history. So I just go to my list, and again, I've covered these stocks, over the years, last couple of years, a lot, and in a recent video. But again, a lot of momentum there. So that's one. As long as the music's playing, you engage that sector. And again, there were trade ideas and levels in the videos that I put out the other day. Just too much to cover right today in this video. Wheat still firming up, a little more work to be done. You can see there's that potential divergent low still yet to be confirmed. I want to see this PPO curl up, definitely put in a higher low. I want to see that confirmed, and I'd like to see the PPO move back above that zero line. And then this one may be, it's still on watch for another swing trade, possible long-term trade. And let's look at a couple other things. XBI, the biotechs, again, I don't have a very strong opinion. And as far as the sector goes right now, we fell, we hit that first target mine, we bounced. That's where I mentioned covering the short, not wanting to go long, even though I expected a bounce. I just didn't see a lot of meat in the bone there. And so far, the bounce has been somewhat lackluster. You can see we've come back, tested that support level several times. We're rolling over. PPO's in bearish territory. So if I had to go one or the other, I'd probably go short the sector now. But as you guys know, you can, especially within biotechs, there's so much diversity among the individual companies because they all have different business models, different drugs in their pipelines. So you have some that can be doing great, others that are not doing great. And we have two, I believe they're both official trade ideas, if I'm not mistaken. Celgene, that's doing well. That one, we had a quick bounce trade, hit the first target, it pulled back, but still stayed above entry. and has since come back in and hit that first target actually several times again, but it's starting to take that level out. Not really impulsively yet, but it has. Yesterday it put a new high, at least a new high since that big gap down recently. So this one still looks good. You can see the PPO curling up, the RSI moving up from extremely oversold levels. I mean, I don't think the stock has ever been this oversold in its history. You're talking a reading under 12 on the RSI, or normally anything under 30 is considered oversold. So again, I just love this one at support. Even if it's a dead money trade for a while, we caught a bounce here on it, and I see minimal downside. But again, if they take the stop out, it's gone. We let it go. No big deal. But still has some potential there, especially if it's going to go on to come back into this first target here. It's quite a bit of upside left. So I still like that one. And the Gilead, which I mentioned yesterday, this one was a long taken here at the both the downtrend line. This is a multi-year downtrend line, goes all the way back here to 2015, early 2015. And you can see we also have horizontal support right there around 72. You can see the reactions here, reactions here, reactions here. Just one of my favorite plays. Oversold. You can see deeply oversold here at support, not just one, but two different support levels. So again, this is another one I think the risk reward is very attractive. I see minimal downside compared to the upside potential. And I added this only as a one target that's bounced up to this level. The target's at 76.32, set just below the actual resistance of 76.48. If you're a longer term investor, trend trader, and you're bullish on the biotechs or Gilead in particular, certainly you could swing it up here, try to get a move back up to that 81.76 level. But that's all I'm looking for right now in this one. So there it is. There's my take on the biotech sector, more bearish than bullish, but as far as the sector goes, my opinion right now, the near-term direction, I don't have a very strong opinion, but here's a couple of biotechs that have been beat up and appear to look attractive. And these are also big names, they're multi-billion-dollar companies, so the risk isn't as big as in some of the smaller biotechs. Put up a couple charts of the indexes yesterday, particularly the 60-minute charts I'm watching right now on QQQ and SPY. And what we're seeing is a first divergent high in a while. These 60-minute time frames are probably my preferred swing trading time frame, especially for short-term trades lasting just a few days to a few weeks. You can see last time, well, we had a divergent high. You can see these divergences right here. So at this point here, we had a divergent high, and that was good for a pullback. Here we had a divergent high, that was good for a pullback. And this is the third divergent high so far. We had a divergent low right here. You can see that was good for a rally. So these are what I like to swing trade. And as I mentioned there, I'm looking for a scenario that looks something like this in QQQ. And I think that if these divergences are going to play out, they probably will fairly soon here. And I wouldn't be interested in shorting a pullback on QQQ if SPY didn't confirm. This is SPY. QQQ being a large cap ETF, mostly tech stocks. It's the NASDAQ 100. And this is S&P 500, SPY. Again, all large caps, the 500 largest companies in the US here. So you have a nice uptrend line right there to watch. Pretty well defined uptrend line. You have a divergent high. That divergence is now confirmed. It might have been, when I first pointed this out recently, it might have been potential, but you can see we have that bearish PPO crossover, putting in a lower low on the PPO, as well as the RSI, as well as my 1333 trend indicator. And this one, if these large cap indices play out the way I expect, a little reaction once on the next tag of that trend line, move down to the 256.18 level, a little reaction there, and then a move down to 253.87. And if things get ugly, probably go down here to 250.26. That's SPY. Somebody asked about IWM in the trading room today. This one I've been watching closely. It's just been a very slow sideways to slightly lower grind recently. You can see for over about 5, almost 6 weeks now, we've moved sideways to lower. And the story on this one, well, We're in what I call no man's land, meaning we're smack between resistance, which would be those recent highs. That's the all-time highs back there. We had another high right here, so pretty much a double top. So you need to take out that level. It looks about 150, 50 or somewhere in between 150 and 151. And then I have, it's not on here, about 144. When you look at the daily chart here, let me flip over to the daily chart and show you what I'm talking about. Here's a daily chart. This is the breakout level right here, about a little over one. It's actually 144, I should say, not 154, about 144. If we fall back below there, especially with an impulsive move, a sustained move down below there, that would, in my opinion, take us all the way back down here to 133.45. That'd be a big drop. Reason being, this breakout here will have proved to have been a bull trap, I'm sorry, a false breakout, referring to the breakout over this previous high right here. We had a divergent high there. We had a correction. We pushed up, made another larger divergent high. You can see the divergence on the PPO. And as I mentioned, this is the most overbought IWM, or the small IWM has been in its history. Never in the history of this ETF, and it goes back for, I think, decades. His IWM, I'm sorry, been so overbought. So, and my response in the trading room is one of two things are most likely to happen. When I see this, you see these extreme overbought readings. It's either a one and done, meaning that's it. We reached that extreme overbought reading and we're going to have a correction now. Or what will happen sometimes, it's hard to say. It all depends on how we act here on this back test and what happens. But if IWM were to power up and take out those highs like I just talked about a minute ago, let's say we go up here, make a marginal new high. This would be my preferred scenario. Go up, make a marginal new high. Unless we can really get up there and burn through these divergences, what I would see happening is this. I would see negative divergence put in place here. So in other words, the RSI, if IWM can reverse soon, make a new high, the RSI would put in a lower high. So with the PPO, move back down, and we'd have at that point this negative divergence, and that would set the stage for a powerful move down. Right now, I don't know. It's hard for me to gauge the near-term direction. A lot will have to do with what the rest of the markets do, the large caps as well. So I'm open to both possibilities. And really, like I said, near-term, I'm neutral. I don't have a strong opinion on IWM, but those are the levels to watch. That 144th level, again, watch for that breakout and see if that holds on any back test. And the recent highs. We had those double top highs. What does a breakout look like? Is it strong? Is it impulsive? Is it confirmed with volume? Can we take out and burn through these divergences? In other words, can we take out that previous reaction high on the PPO? That would negate any negative divergences at this point right here, at least between this peak. So those are the things I'm watching for in IWM. And again, we'll be watching the SPY and QQQ charts intently today to see if those 60-minute divergences start to play out. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.